What's up, everybody? I'm Jake Martinez, your favorite mortgage lender, coming to you today to be very proficient with my time and review some mortgage memes. Without further ado, let's go ahead and get started. Where to begin on this? Look, mortgages, a lot of people forget that mortgages are very, very, very big loans. I'm talking, at this point, $200,000 to, potentially millions. A lot of people seem to forget the amount of money that we are dealing with. Trust me, everybody wishes the mortgage process was easier from applying to closing. However, you have to realize the significance and the value of the transaction that you're dealing with in order to make sure that everything checks out and there's no complications involved. There has to be a multitude of steps and processes that we have to all simply endure. Luckily, myself and any other good loan originator out there will walk you through every single step of the way. You never should feel like you're alone. If you borrow money, you should be expected to pay it back. And if you don't, there are many negative consequences that will come from that. But pretty self-explanatory. Make sure that you pay your bills. Okay, I can actually relate to this one here. The credit report is usually always the first step in seeing if somebody is eligible for a loan. A lot of times you'll know really quickly, right after pulling that report, if this is a loan that has any potential, at least for right now. If an officer runs your credit and is immediately smiling, brushing their hands, licking their chops, whatever the case may be, that means that you have a great credit report, and any lender is going to be more than willing and happy to help serve you because they know that you're a borrower that they can trust and a borrower that will most likely be getting a loan sometime soon. That's not to say if you have bad credit that we should just turn you down and not work with you. Bad credit always can be turned into good credit. It usually just takes time, and again, if you're working with a good loan officer such as myself, you should be able to be put on some kind of credit repair plan. That way you can get your credit at a point where we can work with you in the near future. Okay, here's another one that I can relate to. And we don't see it all the time, but we see it enough where it becomes a common annoyance. When applying for a mortgage, you should really make sure to keep all of your personal and business life the same and steady from the point of applying to the point that you close. The reason is, in the mortgage world, underwriters hate major changes. So, obviously, if you are putting an offer on a house and suddenly you quit your job, well, there goes a whole lot of guaranteed income that we, as the mortgage originators, can no longer use in your qualified income. If there's no job, there's much more risk that you will not have the income needed to qualify for a loan. The same is said with your credit report. Never go out and apply for any new credit cards during your application process or after you've submitted an application. A lot of people don't realize this. You don't want to go out and close out or pay off a lot of debts either after your initial credit report is run. That is because actually closing out current credit accounts can actually negatively affect your credit score, and if a score drops too much, that could do some major damage and make some major differences to your loan file, specifically with your interest rate. Wow, Mr. Customer, I didn't know you were so knowledgeable about the mortgage industry. You should work here. Gosh, I love that movie. That's pretty self-explanatory. I don't think this is necessarily just with mortgages. This is with any type of profession in the world. Especially with the rise of internet and Google and such. Everybody feels like they're an expert on everything. Yeah, there's good and valuable information out there, but trust me, myself and any other mortgage loan originator that's licensed has done a whole lot of work to study, prepare, get certified, to do what we do. Another thing too is rules and regulations in the mortgage world are constantly changing at all times. We here at AmeriDream literally have a team of people that's job is to watch and keep up with any changes in regulations that are constantly coming at all times. Because of that, I promise you, me as the mortgage officer or the mortgage officer that you're working with is much more up to date with current rules than, let's just say, grandma. Not to say grandma's wrong, she just probably doesn't have the same information being sent to her and the same up-to-date information that's being sent to her as we are at all times. Oh, guys, mortgage approvals coming along. She hasn't sent you the documents. Yeah, like I said in the meme at the beginning of the video, the mortgage process is a process. We are going to ask you for documents, sometimes very important and secure documents. And there's quite a few documents that we have to get. It's just a part of the game. The quicker we can get all that information sent over to us, the more better and more easier the whole entire rest of the process is going to be. Trust me, you would much rather have all of your stuff done at the beginning of the mortgage process rather than right before closing. That's going to make everything so much easier, and it's also going to make sure that we don't run into any unpleasant surprises. Lloyd, your credit score is 470, so you're telling me there's a chance. Yeah, there are some chances with a really, really low credit score. However, when you're getting in depths that are in that range there, we have to look at some more unconventional style loans. Those loan types usually require much, much more upfront down payment than any of the other more traditional loan types would. In addition, a score of that range is usually going to result in a skyrocketing high interest rate. By just doing a little bit of work to your credit in terms of credit repair, you could actually probably get that score at a more manageable number and get much, much more favorable loan terms than if you just went with what you had now. And again, the scores are very dependent on the lender that you work with. A lot of times, the lender or the investor that they are brokering out to may just flat out not accept a loan of that score. So again, just like the meme says, it's not possible to get a loan of that credit range, but it's going to be extremely difficult, and the loan options that you might get may not be the loan options that you necessarily want to pursue, especially in the long term. That's going to be it today, folks. As always, I'm Jake Martinez, your favorite mortgage lender, and remember, you're almost home.